Hello guys, welcome to the 41st edition of the Trading Opportunities webinars series, and this is your host Nirav. Give me a few seconds while I load up everything. And if you are able to see and hear me, obviously let me know in the comment section how is the audio and the screen share. And if you are able to see, I just verified at my end, it looks like at least on my end the audio is working well. Hello Steve, how are you doing today? Hello Fraser. Okay guys, so let's not waste any time. Here is a quick disclaimer on screen suggesting that all content presented here is purely for educational purposes. I'm not soliciting buy or sell. If you do go on to use the views presented here for your trading, investing, or for any other purposes, then you yourselves will be liable for your profit, your loss, or loss of profit. Rest of the disclaimer, kindly read the same on the screen. Steve is saying, fine, thanks, hope you're well. Yes, Steve, I am well. Nice to know. Okay. So with the disclaimer out of the way, let's head over to the very quick introduction. So if you are attending these webinars for quite some time, you might already know that my name is Nirav and I'm the admin and owner of 50eyes.com, which is the website where I have been posting my views for about 8 years now, right? And this webinar is a part of the webinar series called Trading Opportunities webinars, and this is the 41st in the series of those webinars. The previous webinars you can check by visiting my YouTube channel 50 Eyes Market Analysis and then hitting the live button. There you should be able to see all the past webinars, 41st, 48th, 39th, 38th, etc. etc. So the 41st is the broadcast which is currently happening right now. The way we do these is we do them 3 times per week: Monday, Wednesday, and Friday. The timing is 2 p.m. GMT. So far we have caught 44 trading opportunities in these webinars. I'm just talking about the big moves, not the small moves. 44 opportunities in the last 39 webinars. We will see what happened with the 40th webinar today, of course. Continuing on, I am also the author of Think with the Markets, Secrets to Achieve 80% plus accuracy using Elliott Wave, available on Amazon's Kindle platform. And most importantly, here's my industry leading track record of 80% plus accuracy of consecutively 6 years. Let's hope it loads. Okay, not sure what's happening here. Oh, there it is. So these are Google Sheets containing all the records of all the public webinars and videos that I've conducted, the date, instrument name, the discussion we did, and the video link and what happened afterwards. So the way of putting this accuracy is we calculate the number of things that worked, 37, and just check the percentage out of it. So the things that work are +1, things that didn't work are -1. Similarly, you can just check the accuracy for 2020 by scrolling down. You can check every single video, and 2019, 84.88, 2018, 84.61, and 2017, 87.50, and 2016, 83.34. So the reason for showing off all this stuff is that generally in this industry, an accuracy of even 60% is considered extremely high. And I just wanted to show you off that I have managed 80% plus for consecutive 6 years. With that out of the way, let's consider the about us section just complete. And lastly, just note that we will go first discussing the currency pairs: Euro USD, EURCAD, USDJPY, EURJPY, and then crude, gold, S&P, and Nifty. and lastly Bitcoin. I will look at all your comments once I complete a discussion. I will look at the comments regarding that particular chart and so on and so forth for every single chart. So let's now have a quick look. I seem to have gotten some comments. Philip Pack is saying I'm driving, so I can't respond very often. Thanks for all you do. You're very welcome, Philip. And of course, no need to reply while driving. Philippe Calphone is saying good morning to you, Philippe Calphone as well. So let's not waste any further time and get ahead with the actual webinar. So if you can confirm one final time that you can see the screen and hear the voice, anybody with a yes or yes audio is clear or something like that, that will be great. In any case, we are going to now continue with the actual discussions. First of all, we have the chart of Euro USD on screen here. So on Euro USD, we have already discussed that we may have either an up leg or a down leg. The trade setup for down leg was the one which was actually the clearer setup. And the setup actually was that if the market goes below this last low, which on this particular data feed is coming around 1.06122. By the way, I sorted the text problem. I think it will work now. 0622. Yes. So it is bigger in size. Hopefully you can give me a feedback, Philip Kalfon. Thank you for the confirmation. And what do you think? Is this size a little bit too big or is it all right? 1.06115. I mean, you get the idea. It's rough anyway, so I'm not going to correct it. But that's around the level. What do you call? We think we will be looking for a sell setup. So continuing on. So what has happened so far is Steve says text is good. Okay. And what about the other guys? A little bit more of a confirmation of the size would be nice. I'll continue with the webinar. You can just type it in the comment section. Philip Kalpin saying, all right. Thank you, Philip. Okay, so now continuing on with the webinar, as I was saying, there is no yet confirmation of any trade here, right? As I said, we want to take the shorts either near the low or at the break of the low, but so far it has not broken the low and it has not given a substantial or strong enough move for me to consider taking a short without it breaking the low. So my position remains the same. I have placed some alerts on the downside, as already mentioned, near this level and a little bit below it as well. And once actually it's incorrect. 1.06128. That's the actual. That's around the level where we want to look for shorts. Okay, so wait and watch on this counter, and the bias remains more towards the bearish side because of the price action, but no triggers yet. Okay, and we do seem to have some events incoming as well. FOMC minutes. All right. So nothing to update here. If you have any specific doubts, you can just ask in and or just type in understood or clear or something in the comment section. While I see if there's any additional points I have in mind for this particular count. Not really. The base setup does look promising. So we just wait and watch for it. Okay. I don't seem to be getting any questions on this counter. Please do type in clear or understood or something so that we know everybody is on the same page. And yeah, by the way, guys, for those of you watching in the recording, these questions that type in clear or understood are not for you. I do take doubts only in the live webinar. So if you are interested in asking something or you have a doubt, you will have to attend the webinar, right? I'm not running a service like that, right? It's a free webinar, but if you want my time, you have to attend it. That's basically what I mean. Thank you, Steve, for the confirmation. Thank you, Fraser. And let's head over to next chart, EURCAD, where I had a running long trade, right? And the setup remains the same. We are still of the view that if the wave C is complete here, then this market should head higher. Now let's see what really is the count. So from this point of reference, which is the price level around 1.45925, we seem to be having the view that this market has given us a possible ABC correction, right? Now, if this market has given us an possible ABC correction, then in Elliott Wave terminologies, it would look something like this, right? So the first leg is what we call the A, the next leg is what we call the B, and the last leg down is what we call the C. So if this count is holding true, then this C is possibly complete here, and that would suggest that this market will now take out the high, the last high. So it should take out this high, which is around 1.46423. So if our count is correct, then that means it should not take out this low as well, right? Now I had longs which I had entered somewhere around here. Right? The idea was that I would hold on for this whole move. But yesterday I exited my longs, and the reason is that I had too many positions on, so I had to take something out. I had, I think, simultaneously 3+ trades going on. So for that particular reason, I had taken out the longs. Right, nothing wrong with the position; it is still a long, and I will possibly look for a re-entry here. Okay, but I am not currently long. That's what I just wanted to make clear. The reason was nothing to do with this chart. It was just my own money management and stuff. Right. Anyway, so as I was saying, the longs are still looking good here. Right. Count maybe multiple ways to count it, but you can think of it as a expanding diagonal. So maybe it will even give a correction. So that can give me some better entries as well. Right. So what I'm talking about is that the market might proceed something like this. So just follow this pinkish line. Anyways, that's one of the expected progressions. And the stop loss for this is the same. Technical stop loss remains below the last low, or more or less you can say just 1.4250 is our stop level for this counter. So nothing really to add again. That's about all the points I think which should be covered on this counter. Let me know if there's any specific questions on this particular chart. Otherwise, we'll just check out the chart of USD against JPY, US dollar against Japanese yen. So USD against the Japanese yen, where is it? 1 hour. There it is. So if you guys remember last time when we were discussing this particular chart, I had pointed out a short-term setup for the long direction. The setup was, where were we the last time when we discussed it? We were around discussing it around 20th February. One second. Let me see the exact levels so that I can comment proper points here. Okay, so somewhere here was the price when we were discussing it the last time. And the idea was that this was progressing as a complex up. So that was the W, that was the X. Now, coming to the actual important part is that this was the X, and this suggested that this market will now have a wave Y up, and wave Y up basically suggests 3 waves in the other direction. So our view was that this market is having a up, a B down, and possible C up. So based on that setup, I was able to take minor long positions around somewhere here, and I exited right at the break of the level. This was a scalp kind of a trade, very quick entry, very quick exit. Thank you, Philip Calfon, for the confirmation. And yes, guys, do sending the confirmations should not be required to ask every time. Of course, you know how we progress with these webinars. So, anyways, as I was saying, that we were expecting that this market is still progressing as an ABC up for the wave Y. It did the bare minimum. I was able to trade some of it, and this actually is not the clearest count. That's why I did not wanted to hold positions for anything huge. Also, given the fact that it's a seemingly counter trend move. So again, another reason I exited very fast or swiftly. Otherwise, our targets can go to 135.56 or maybe even higher, right? So now the idea is that either the B is here and the C is here, but the more likelihood scenario is that the B is still around here somewhere, and then the C will take out the last high again. So maybe we will again find some trades, again intraday short-term trades, not something like a swing or a big move, very short moves. So you gotta know the whole short-term counts, smaller time frame analysis. So you need to do your own work if you want to trade something like this. So that's our take on USDJPY. Still the same short-term wise, as I said, still looking like this. Let me go to 1 hour and show you. I think you can just follow the red arrows and see what I actually mean here. Again, for those of you not much familiar with Elliott waves, we are looking for something like this. This is called a complex correction. Right? Once this correction is complete, then we expect a downward movement. So WXY is a complex correction, something like this. On the rough hand side, I am drawing the 3-leg move is called a W. Then this leg is called X, and the 3-leg, excuse me, move again is called the Y. So that's our take on the chart of USDJPY, right? Let me see if there is any doubts here. So to USDJPY trade, thank you. So Steve, one of our YouTube channel members, is saying that he was also able to catch the long trade, which I pointed during the live webinar. How nice is that? Okay, so thank you for pointing that out, Steve. Thank you for the clarification, Fraser. So now let's head over to our last chart in the Forex discussions, which is Euro against Japanese yen. 15 minutes should do. Okay, so you guys already know what was the view on Euro against the Japanese yen, right? So let me discuss some of the trades that I was able to pull here, and what's the take on this particular chart. Somebody is asking for S&P 500. That will be discussed after this chart, followed by crude gold. So 3 charts you have to wait. So again, now coming back to the discussion on Euro Japanese yen. As I was saying, Euro Japanese yen, we were waiting for an up move, right? And when we discussed it the last time, the time was, let's see, 20th February, 20th February, 20th February, there it is. So we were somewhere here when we discussed it the last time, right? The setup was very, very clear. I was saying that either this is the 2 or the 2 is continuing sideways. Whatever is the case, by the way, let me just put it there for a sec. So I was saying that whatever is the case, after this, we need to see a move which goes and takes out the last high, right? So this was the setup, right? And the setup did play out just like that. I was able to take this long, right? And then there was this huge pullback, and I thought that it will go up for wave 3, so I was able to take this long again, and I exited when it started to fall. So I was able to take 2 scalp trades here on the upside. And after that, I had to close all my trades because I had multiple trades running on the Forex pairs, right? And I had to also leave the office because I had been taking continuous trade after trade for 3 sessions, I think now, 2 sessions. So I decided to close the trades. Anyways, the point being that I was able to capture this leg up and some part of this leg up. If anybody else was also following and was able to capture something here, do let me know in the comment section while I discuss the future possibilities on this counter. So as you can see, not the prettiest of counts, right? I have seen better or more clear looking counts, but both theoretically and practically, it does hold on to the rules and as well as guidelines of lead wave patterns. Wave 3 is not the shortest. They have an overlap. It could be construed as a diagonal. Complete here, right? So if that is the case, then we already know what's going to happen here. So let me just quickly switch to the, I think 1 hour is fine. So on 1 hour, as we already know, this is the count we are following for quite some time. We are under the impression that this leg down from this point to this point is a leading diagonal. Right? Those of you not familiar with the lead wave can just call it a wedge pattern price action concept. Now the movement after this wedge pattern's completion, that is from this point of reference, which is a price level around 137.38, we seem to be having a wave A up, B down, and possibly a C up, right? And if that is the case, that the C up is complete here, then we expect the market to fall and take out the last low, which would be the low of 137.40, roughly speaking. So, long story short, if the C is complete, this is the kind of movement we are expecting. Of course, not straight line, but in that direction. So, you get the idea. And secondly, we already have the level marked for resistance. And keep in mind, we had this level marked when this market was here. So, around 11th January, we were able to predict this target. Such is the power of lead wave analysis. And if you recall, I was saying that the market will take or start to show some sluggishness in this zone and possibly take resistance at the upper trend line, or not the trend line, upper level, right? So here the upper level is at 144.19. The market seems to have taken resistance around 144.15159, so almost 16. So more or less it has taken resistance exactly near the upper part of the zone or near the end of the upper zone. It does seem to be fitting in our picture pretty nicely, actually, like sort of picture perfect, I would say, right? However, we still don't have any confirmation for shorts. Aggressive traders might be interested in taking entries right here and putting stop loss here, but I will not be interested in that. Reason being because we still have this movement which looks very corrective in nature. So what I'm going to do is I'm going to just leave this alert here. If the market takes out this alert, then this might interest me in entering shorts. And the alert level is currently around 142.685. So below this, we will be interested in shorts. And upside, definitely we need to track the possibility that this market might be doing something other than what we are thinking. So in that case, basically, I'm not saying that the count is wrong just yet, but in case it is, we need to be prepared, and that's why we would like to place an alert above or near the last high. So if the market takes out this last high, of course, I will look for entering longs, because the failure of a good short setup is generally a setup in the long direction. Not always, but sort of it works like a concept. Nothing much to add here. If you guys have any doubts, you can let me know in the comment section. And those of you who have joined in the webinar first time, you can check the past few webinars. Let's say this is the 41, so you can check 36, 34, 33 or something. You will see that we have discussed this resistance level way before. As a matter of fact, when this market was going down here, I was saying that it might give a spike up and touch this resistance zone. So just to show off how well we are with what we do. So again, guys, 13 participants are seemingly visible in our comments here or live chat. Where are the confirmations or comments? Are you guys sleeping? I know Philip is driving, but what about you others? Thank you, Steve, for the confirmation. Okay, so let's head over to our next discussion. That will be crude oil followed by gold. Let me quickly load up the chart for it. Jill is saying clear. Philippe Calfon is clear. Fraser, all good. Thanks. All right, guys. Little bit of swiftness in your replies would be much appreciated, but thank you for the confirmation. So, crude oil still remains unclear as ever, not as ever, as has been the case for the past few sessions, right? So, let's see what it really is doing. Actually, there is nothing much to add here compared to the last analysis. I'll just quickly put a summary of what our analysis is for those of you who are joining in new. What we have here is a possibility that this market might be following a corrective sideways pattern called a triangle. So in case of a triangle, we will need to see a break of this level below 72.32. If there is a break below 72 point, actually, let me just get the exact level. 72.134. Keep in mind the data feed is the data feed of this particular broker. Your data feed will give a different price unless of course you are following directly NYMEX futures chart, right? CFD brokers seem to be having a different price. Of course, you know all that. Why did I write even 134? Is it 134? So roughly speaking, it's 72.26. You get the idea. Just check it at your own chart. It doesn't really matter. The low is what we are looking for. And anyways, the point is that this looks like a possible triangle pattern. Once it's complete and the market breaks below 72.26, we will be very much interested in taking short sells or sell this market basically. On the contrary, if this market takes out the high level of 81.027 as has been marked already, then we will be interested in taking long trades on this counter. Reason for longs will be that either this complex correction is continuing or possibly this it has established itself or completed itself over here, and this was just the price establishing itself for a strong up move, kind of like a springboard, springs going inside before you take on the jump or you shoot up. And use no need to create a picture, you get the point. That's the setup. Sell off below this level is what we are looking for, and upside above this level is what we are looking for. Nothing much to add, but if you guys have any doubts or questions, I'll definitely take them. Now let's head over to the chart of gold here. So it has not been moving precisely as expected. If you guys remember last time when we were talking about gold, I had long positions, right? I had to exit them, I think either in minor profits or minor loss. I don't exactly remember because it was closed along with the other trades that I had. Thank you, Steve, for the confirmation, and thank you, Jill, for the confirmation as well. Right. So, anyways, long story short is that this being a wave one, this being a wave two, was all right until we saw this whole clutter, and this is still going sideways. So, of course, it is still possible that the two holds here, and it is also possible that this market is forming a WXY complex or something like that, and it will go and take out the last low, this low, I mean, for the wave two. So long story short is what we expect is that either this market will do something like this, or it could be just the two here and will just fly high from here. Both things are possible. I don't know which one is the one it's following. So that's why I took out the positions, right? It's a wait and watch for now. My buy still is bullish. After all, it remains bullish as long as the market holds above 1820. So I will like to place a small alert below that or near that low. If the market does break this, I would like to be aware, because then the bias will shift from bullish to bearish. So concluding this particular discussion, still bullish bias, but no long trade for now. We'll look for possible longs above 1844, roughly speaking. In case we are wrong, we will look for shorts or to change our analysis below 1820, which is more or less the low. So that's our take on gold. And as far as the pattern or the Elliott Wave pattern is considered or is discussed, we expect that after the one up and two down and three up, we will see a fourth and the fifth. Of course, I'm discussing it for the new people who are following or watching this for the first time. The progression is called an impulse. It would look like something like this: one up, two down, third up, fourth down, and fifth up. So that's why when I made this leg up, I said it's as a four, and this is a four, this is a three, this is a four, and this is a five. Hopefully, there are no doubts on this counter. If there are, the live audience can just type it in the comment section before we head over to the chart of S&P's 500, followed by Nifty 50, and lastly, Bitcoin. Thank you, Steve, for the confirmation here, and Philippe. Let's head over and see the chart of S&P's 500. It is over here, I think. Yep, there it is. Thank you, Fraser and Jill. Is the internet still working? I see that my own feed is just rotating. Anyways, I'll leave it as it is. If there's any problems on the live stream, you can just let me know, because the comments seem to be working at least. So S&P is 500. Let's see what's the story over here. S&P is 500. Last time when we discussed, we were of the view that this market could be having a wave 2 in progression like this. It will go up and then down. That was one of the counts. Second count was that yeah. Second count was that it will just go like this. I mean, basically the way it has already gone. So long story short is we expect that this is the wave A, this is the B, and possibly we are heading for the C. Now this is just the possibility we expect right now. I personally would have liked to see this market go higher for the B and then head lower for the C, which is, by the way, theoretically still possible, but this leg down is quite sharp. So we are better off taking this market as the B possibly complete here. So I'll just update it on the live chart here. We will remove the possibility of Z here. Those of you who are not able to understand what we are doing here, I'm just labeling the upward movement as a double zigzag correction in Elliott Wave terminologies. If our count is correct, then this is your wave A of the flat, or dot A in this case. This is your dot B of the flat, and right now we should be looking for a dot C in the flat structure. Right. I already have some zones marked over here. Right, so we expect that if this market is heading lower for dot C, then it can start seeing some support at or in the zone of 3977 to 3933. Right, so this is a possible support zone. So if the market really does take support within this zone, just mark it over here. The market does take support within the zone, then we can then afterwards see a reversal for the possible wave 3 up. Again, keep in mind this is all based on the hypothesis that this is still an impulsive count, or at least an ABC in the upward direction, right? One thing worth noting over here is that this market reversing right away from here and giving this sharp leg down is a sign of possible weakness, right? So it is also a sign that something might be wrong with this analysis. What might be wrong is things like a very small C be complete over here instead of there, and the market plunging down right away here like that. Okay, we don't have evidence for it completely yet, but I'm just telling you guys, keep your eyes open for unlikely scenarios. We already have a sign for it, but no confirmation yet, right? Okay, so S&P 500, I think we have covered all the points. As I said, this is what we expect. Price levels we already have told you guys, 3966, 3933. So I'll wait for your comments in the live chat if you have any questions. If not, just let me know. Clear. Steve is saying internet okay, but slight pause. Okay, now. Thank you, Steve, for letting me know that. Next up, we will pull out the chart of Nifty 50. Philip, thank you for the confirmation. And lastly, we will then check out the chart of Bitcoin. Thank you, Steve, for the confirmation. Let's head over to now the chart of Fraser. Thank you, of Nifty. Yeah, guys, before I move over to any further chart discussions, one important thing. Do make sure you hit the like button on the respective platform you are on. It is very important. Instead of seeing an increase in likes and views, I'm actually seeing a decrease, right? So we have done 40 of these webinars, and this is the 41st. So I was hoping that the YouTube algorithm would have picked it up by now, or somehow the things would have worked out. That does not look to be the case at all, right? We still are not crossing even 400 views per webinar. So again, I would like to take this time and request you that if you want to see more of these webinars and you like this content, then we need to have more views. That is the only way these webinars can proceed. So please do your part and share the content after the webinars are complete. Also, I am on Twitter at the rate of 50 underscore EYES. You can retweet it and share it over there on my Twitter handle. Here it is, at the rate of 50 underscore EYES, or whatever respective platform or WhatsApp group or Facebook group or Twitter group. I mean, not sorry, Discord group or whatever you use for connecting with fellow traders. Please use that and share the word. It is very, very important. Right now, heading over to the chart of Nifty 50. So Nifty 50, what we had last time was the discussion of some price levels. I did discuss account, I believe, but more or less I remember I left it with a discussion of a certain price level, right? And I would prefer not to guess things here. So let me see if I can quickly load up the last discussion, and we can head over to Nifty, which is discussed around 2737. Let's see. 2737 something. So here is the discussion starting on Nifty. Again, guys, if you want to rewatch this whole thing, make sure you turn the quality to HD 1080p. The backgrounds being black will definitely have a problem. So Hari is saying 17760 level is what we were discussing. Actually, I said that there's a level, if it breaks below it, then we will be only interested in shorts. And what I wanted to see is if I can show you that level. And I also personally, oh, there it is. There it is. Thank you, Hari. You have a good memory. Okay. So as I was saying, the analysis I did not discuss in much detail because I had multiple counts and I did not want to discuss them because it would have taken a lot of time. But as Hari very nicely mentioned, and as you can see over here, this is the recording of the 40th webinar, as you can see on the top left. So in this 40th webinar, we discussed that if this market goes below this level of 17,760, then we will be interested in selling this counter, right? Now let's see what happened afterwards. Keep in mind this was discussed on 20th. So let's remove it. So let's see 20th February, right? So this was the discussion done over here. Where is 17,760? 17,760. So what do you say to this, guys? Does it look like the market is a person who hears our webinars? Now you got to comment on this one. The market gapped down below 17,760. It gave us a clear sign that yes, the analysis for the downside is going to play out. And look at the classically strong down move. It was hard for it to take out any single past candle on this 15 minutes chart. So I'll wait for your comments. What do you think of this particular analysis? Of course, we have caught 40 with this. We have caught 45 trades in the last 40 webinars, but this one in specific looks exceptionally good. So what do you say to it? Where are your comments? Hari, Steve, Philip, Jill, Fraser. I was saying I like to know how did you come up with 17760 for sell-off? Are we looking for break of some wave count? Well, Hari, I'm not going to discuss that in extreme detail because there was a reason I never discussed why I came up with this analysis because it was proprietary. If you guys know, I have about 5-6 years of research done privately. I have taken a very small part of it and published a book as well. And rest of it, like 99% of it, is proprietary research. That's why sometimes you will see I do not discuss some things, and sometimes I may not even answer some questions, right? But Jill is saying great, thanks. Steve is saying clear, very good. Well, that's nice to know that you guys like it, right? And I know it might sound a little bit like I'm trying to hold off stuff, but then again, guys, these are trading opportunities webinars, not Nirav reveals his private research webinars, right? That's why I run classes for them, right? So again, now let's head over to our actual chart and see what discussions we can have on the current price action. By the way, guys, if you are following the news, you might have heard that let me remove it, that a certain big trader, of course you guys already know, I believe Mr. George Soros, has shown some bearish interest on the Indian markets, right? So that has seemingly impacted the sentiment. I'm not a sentiment analysis guy and I'm not interested in talking about news, but I'm pointing it out because Mr. Soros is very, what do you call, high level of trader. If he says something, it's not just something he's saying. The other people around the world with big money are also following him. So it would seem that Mr. Soros has already entered the market and quite before his comments, and it is looking like we are seeing the action only afterwards. But then again, as I said, we don't really care about much about the news and what people say. We follow the price action, and if our price action analysis is fine or correct, then and then only the market is something we will trade. Otherwise we will not trade it. Okay, just something I wanted to point out because this news event is not a small event. By the way, guys, are you familiar with Mr. Soros's 1992 trade against the Bank of England? Is anybody in the chat following his work? If not, you should check it out after this webinar. Just type his name and the trade against the Bank of England. You will find a very interesting story there. So coming back to our analysis, right? Actually, I don't think I have analyzed anything yet. I'm just talking jibber jabber. Sorry about that. So as I said, there are many views for this counter. They are still valid, right? Steve is saying yes. So he knows about Mr. Soros' work. So is Jill. That's good to know that we have informed people among us. Right. So now again, following on with the analysis, the idea was that this was a W, this was X. Again, keep in mind, this is one of the multiple views we have. And then this was the Y, right? Now, given this huge leg up, we were expecting that it will take out the wave X high, right? And it will just go up. Instead of doing that, it has done the complete opposite. It has first gone lower. Even till this point, we were expecting that it might go up. But this is something out of the ordinary, right? So how do we account for this? Right. So how do we account for this? Right. So see, there are again, as I said, multiple ways to count this counter. Okay. And the clearest among them is suggesting that either this is a very, very weird looking structure going up. So I would assume it's a diagonal. But the diagonal structures don't really have this strong move. Look at the strength of it. So how do you look at the strength of it? You just look at this box and compare it with this box, right? So they seem to be sharing almost similar strength, almost similar, of course, almost being the important word, right? So this kind of strength we should have seen in the upward direction, right? But we are not seeing it in the upward direction. What I really mean to say is something like this is what we wanted to see from this point of reference around 17,830. This would have confirmed a bullish bias, something like this, right? However, it has gone on and given the complete opposite of it. So at this point, the bias is definitely bearish, right? Confirmation is not there because confirmation only comes at the break of levels or it comes at a break of important price level. So short term wise, we did get a confirmation below 17,760. We did trade it. I was able to capture this movement, right? And make actually big trades here, right? But confirmation, what I'm saying right now is not here is confirmation like that it will break the low. We don't have that confirmation yet, right? So, and I don't really care for it because I was already able to capture this. So my strategy right now is we will track two counts here. First, we will track the possibility of diagonal, which I think is very weak. Secondly, I think that any pullback here will be a possible sell opportunity. So what I'll do is in the intraday session, I will track it on the shorter time frame for any three wave corrections. And I will look for sell setups on three wave corrections. Long story short, what I expect is that this market has more downside remaining. However, as I said, I do not have confirmation for anything. It may very well just show us something like this. Everything is possible after all, right? So if both things are possible, what we do is we wait and watch. Okay. So wait and watch on this counter. And most importantly, I am also not interested in talking about any trades here because we have already caught an extremely big move here. If you were not able to catch it, that means you are not attending the webinars regularly. And if you are not doing that, then of course you are going to miss more and more moves. It's not like these moves can be caught every single time, right? So the times we are able to catch them and see them, you need to attend the webinars, right? I don't have any solution for it. So wait and watch for now. If you are not able to catch it, just wait for the next big move, which we might be able to capture. And as far as my understanding, I have just already told you, I'm just gonna look for intraday shorts and nothing more. As a matter of fact, today I was also shorting intraday, and yesterday near the end of the session, I had taken huge short positions. I carried them, and in the opening session itself, the options were trading at like 90% gains, so almost double the money in a single overnight session, right? So that's about it for Nifty. Not much clear. My personal bias bearish. I don't think I should speak any further. I'm possibly repeating the same thing over and over. So let me know, guys, if you have any doubts or questions in the comment section before we move over to the next discussion of last chart of Bitcoin. And most importantly, as I've said many times, hit the like button, and our views are still not increasing. They are still not reaching even 400 audiences per webinar. So your kind collaboration or help is definitely required. Please share the webinar as much as possible with your friends and colleagues. Word of mouth, whatever helps us get more views is required here. Fraser has typed in Soros is not that popular with me, although I wish I could trade like he does. We all would like to trade the kind of money he does move, wouldn't we? Anyways, one point I wanted to make is not regarding the way he trades. The actual point I was trying to make was that he is a trader since a long, long time. And people in his age, if they are still traders and investors, they have accumulated huge wealth. So if someone who is having huge wealth is saying something according to his views about the direction of a particular market, then people who were trading with him in his time, like when they were younger, would also have the same view. You get the point. Sort of like they have friends and their friends are all rich people. So you get the point. If he says something, even if that something may or may not have any strong reasoning, it is bound to move the money. You get the point? I think I can just say it simply that if you are rich and you have rich friends who listen to you, then it doesn't really matter what you say is right or wrong. They are just gonna follow you. So that was that. Let's head over to our last chart. BTC Bitcoin. Let's see what happened here. So Bitcoin, last time when we were discussing, we were of the view that this wave 5 is under continuation. The minimum target it had already achieved. Actually, we wanted to see it go higher than this, by the way. It has fallen short a few ticks. So let me just elaborate what was happening and what we were thinking. So if you guys are following me on this chart, we were able to capture. Could it be the 4? It's too much of a sideways movement for that. Field 5th is also not likely. So anyways, here is the actual complete chart. And this is our point of reference around the price level of 15,513. This is the actual count we are following. We are looking for a possible impulse in the other direction. Right? We were able to capture this wave 4 completion point here. With partial entries, we were able to take the longs. And our target was actually here. I have removed it. It was, I think, the measure of this wave 1 up. Now the point was that if you were able to capture the turn up or the move up, just trail the position. Okay. So we did not have any new analysis on this counter other than the short-term analysis, which seems to be needing a require update. Right. So long story short, we are long since around 21,500 here. Roughly speaking, of course, it's not like we enter at the exact turns. We have setups and the entries are somewhere around a little bit above or below the actual turns. And our strategy has remained just hold it with the trails, right? So currently, if you are trailing based on your entry, or technically speaking, it should be around 23,380 something, roughly speaking. So soon enough, either it will go up or hit your trail. Manage your positions accordingly. And I have said so many times, I do not trade this counter, right? But I'll update it for the last part. It does look like we may need a possible extreme bullish scenario here. If this market is heading higher, I think we may be seeing a wave 3, which has still not shown its true color. So let me just completely push it like this. 3, 4, 5. That's your 5th. That's a delete. Okay. So what I'm saying here is that from this point of reference, new point of reference around 21,398, we may have a 1 up, a 2 down, and a 3 up, and a 4 down, and 5 up. We do not have any sort of confirmation for it, and we do not need any because we are already long since a long, long time. We were also able to capture this leg up from around 16,900 something to precisely up to the level of 21,500. So we already have profits on this counter if you are following me with every single webinar, right? So we are already long on this counter, so we do not need to do any. Do not need to wait for any confirmation. That's what I mean to say, right? So if this plays out, just keep trailing your levels according to your entries. There's nothing really to add on it. Only time we will see or say that this market is not really doing what we expected is when it goes below 22,000, right? So if it goes below 22,000 level, which is somewhere here, then we will be saying that yes, it does not look like this market is doing what we thought it was, and by that point your trails are already hit. So what do you care, right? Nothing much to add other than this. If you have any specific questions, you can ask me. Otherwise, I will consider that the webinar is complete. And of course, I would request again, third time in this webinar, to share the content. It takes a lot of time and effort to come up with these charts analysis. Some of them I don't even trade. Some I don't have the time to trade because I'm already in trade on other instruments, right? So a little bit more of your cooperation will be very helpful. Again, I already am aware that services like these are underpaid walls. I'm not interested in doing any such thing as of now. So if you want to keep hearing these views and you are not getting bored by my blabbering, please show your cooperation by sharing the content as much as possible. Thank you, Steve, for the confirmation. With these words, I would like to close this webinar, right? Thanks to everybody who joined in, and many thanks to all those people who share my content, tweet, retweet, hit the likes, and the whole shebang, right? Steve will be absent on Friday. Okay, Steve, we'll catch you on Monday. And for the others, I hope to see you in the next webinar, guys. Talk to you guys soon. Bye.